Welcome to InvestingGoldNow.com, where you always learn something about buying, selling, and trading gold and silver. Now here's your host, Nyrik Huskinen.
Hello. Today I want to talk to you about the role gold and silver play as a hedge against inflation. Since 1933, when President Truman took the U.S. citizens off of the gold standard and made it impossible for us to walk into a bank and convert our fiat dollars into gold, the stage has been set for unrestricted fiat dollar printing. If you look at a chart of the money supply between 1933 and today, it was increasing slowly at first, but it's gone parabolic in the last decade. This is the result of programs such as QE1, QE2, QE3, TARP, and others, whereby the government has infused fiat dollars into the money supply without adding any physical goods. If you consider what it cost to buy 1 ounce of silver in 1933 using fiat dollars, and compare that to what it costs today using fiat dollars, it takes roughly 20 times the number of fiat dollars today to buy the same ounce of silver that you could buy in 1933. Just look at this chart. As you can see here, in 1933, it took $1 US to buy 1 ounce of silver. Today, to buy that same ounce of silver requires roughly $20 US. Let's take a look at why. U.S. currency hasn't always been fiat money. Originally, it was backed by silver and gold. You can see on this bill that at the top of it, it says silver certificate, and underneath George Washington, it reads $1 in silver payable to the bearer on demand, which means you could take this bill into any bank sort of as like a claim check, and they would have to give you $1 worth of silver. The term fiat money means inconvertible paper money made legal tender by government decree. What that means is that the currency is no longer backed by anything real. It's only backed by the full faith and credit of the government that's issuing the currency. This board basically depicts what happens to all fiat currencies over time. They hyperinflate, and then they go to their intrinsic value, which is zero. From 1921 to 1924, Weimar Germany went through a period of hyperinflation such that the end result was the complete dissolution of the currency. You can see here that it got to the point of them issuing $20 million mark notes. It got to the point where you needed a wheelbarrow full of paper money, fiat currency, to buy a loaf of bread. A more recent example of hyperinflation is in Zimbabwe. From 1990 to 2014, they went through a period of hyperinflation. It got so bad that you'd have to get paid in the morning every day, because by the nighttime, your money wasn't worth anywhere near what it was in the morning. The inflation rate was thousands of %. You can see here that this note is for $100 trillion. It got to the point where fiat dollars were not worth anything, and they had to switch over to the US dollar in 2015. What I hope you get out of this video is the realization that gold and silver are the only true form of money. They've been around since the beginning of time, and they've held their value all along. Consider the fact that today you can buy a nice men's suit for the same amount of gold that it cost to buy it 30 years ago. You can't say the same thing, however, for the number of dollars. If you found this video to be useful and would like to learn more about investing in gold and silver, please visit our website at www.investinggoldnow.com for more valuable free information.
Thank you for watching. You can always ask a question to Nyrik and Scott at investinggoldnow.com/question. And don't forget to join the community by subscribing at investinggoldnow.com/subscribe.